Welcome to this video, which is all about a simple Forex trading technique, which you can put in your trading strategy, which will help you trade market turning points with confidence, with low risk and really great profit potential. Now I'm doing this video just shortly after I've done my weekly Forex forecast. It is the 27th of December today, and I was discussing that I thought we would see a really good rally in crude oil, and that would bring the Canadian dollar up as well. Now, the Canadian dollar has been a big bear trend to the downside, so has crude oil. Now, I'm sure a lot of people probably think that these contracts might bounce, but a little bit weary of the risk. As we know, at market turning points, it might be at a bearish extreme, but it can still run onto the downside when you've got fear at work, which you certainly have in these markets at the moment, with the majority bearish. So what is a great way to trade them with limited risk? Well, it's traded options. Now, do not confuse traded options with binary options. They're totally different. Binary options are a complete scam. Okay, you have a limited payout if you win. You have a limited risk if you lose. But if you look at the way the payouts are skewed, you have to win normally on about 60% of your trades to break even longer term in binary options. And it's always amazed me why people trade them when you can trade traded options, the traditional instrument, which give you limited risk, but your upside is not capped. So you've got unlimited gains effectively. So the traded option is a far better vehicle. It is the vehicle professional traders use. Now, in terms of options trading, a word of warning is that 90% of options expire worthless. Okay, so let's say you're at, like we are in crude, we're pretty low at the moment. You think things are going to bounce, but you're weary of that one more sell-off to the downside. How would you play it? Okay, this is the way that you should do it in options. It's two rules. Use these two rules when a market reaches a bearish extreme on your charts and the sentiment is a bearish extreme. This strategy, in my view, gives you great odds of success. What you're going to do is the opposite of what the majority of option buyers do. Now, let's say someone thinks crude is going to go to 45 bucks a barrel, yeah? It's 38 now, let's say. What he's going to do, he's going to buy a 45 call probably. And he's probably going to think, well, it's a short covering rally, so it's probably going to come pretty quickly, so I'll just give myself a few weeks to expiry. Now, that is an outside bet. Why? Because he's out the money and he hasn't given himself much time. Time decay is obviously going to destroy the option. Sure, the option's cheap. It's cheap for a reason. What you should do if you want to buy options, as a professional trader would, you probably buy very near where the price is trading. Okay, and what you would do is you give yourself plenty of time to expiry, like 3 months or more. Okay, so time decay is not going to destroy your option. Okay, so that is the way to trade options. Just giving you an example of crude, but it applies to any market. Any time you see a trend, and it happens frequently, traders look at a trend, they think, I know that's going down, just a little bit weary of one more spike to the upside, I don't want to take the risk, I'll wait for a better entry. Then the trend goes the way they thought, they're not in. Now, if they used options, they could trade that with the confidence of limited risk, get plenty of time on their side, and end up with a high odds trading scenario which they'd spot it, but rather than not be in it and watch it go sailing away into the distance, they get in it because they've got the confidence of using options. Now, there are a lot of complicated option strategies around. I see them all the time. Nothing, in my view, beats trading bullish or bearish extremes on a chart by just using the two simple rules of always be at the money, where the price is trading, or even slightly in the money, and giving yourself plenty of time to expiry. Now, I will actually mention another strategy here, which is really for well-capitalized, experienced traders. Just said, obviously, 90% of options expire worthless. So, for the option buyer, the odds are not in their favour. I've just given you two simple rules that I think really put the odds in your favour. But what you can do, if you've got a well-capitalised account, is look to sell the option to the buyer. So what you're going to do is you're going to take advantage of the buyers who go for out the money options and don't give themselves much time to expiry. And I actually saw, basically this is related to crude oil, that the number of people buying $15 put options doubled last week. Okay, so that's $15 a barrel. Now that premium for me is just ripe to be collected. It's way out of the money. If you get that option, you basically sell it, and you're obviously making sure you've got the people who haven't got too much time to expiry. That obviously is, in my view, a really high odds trade. Now, in terms of selling options, there is obviously one thing you've got to be aware of. You're giving the guy on the other side limited risk, so you've got the unlimited risk. So you've got to be very careful the way you do it. That's what I'm saying. It's only for experienced, well-capitalized investors. But if you are looking at the markets and you see option premiums way out the money and collect them, and you do a wide spread when you're selling options. You don't want to be too concentrated in one area, okay? For the obvious reason, if that option starts to move against you, you want a really wide spread, really be diversified. Pick out the money options that basically don't have much time to expire across a lot of contracts, and you can make a lot of money. You need to be well capitalized, very confident in your trading strategy. So only for experienced traders. But I know a lot of traders who only sell option premium make really, really great gains over the longer term. Most traders though, it's buying options. If you're buying options, if you follow the two rules I've given you, they're very simple actually, but most option buyers do not follow them. Also, obviously, you've got to have confidence in your strategy. You've isolated a bearish extreme or a bullish extreme to do it correctly. I mean, obviously, the option is a vehicle, okay, that goes in your strategy. It's a technique. It's not a strategy as such on its own. I hope this video has been helpful. If you want any more info on options trading, feel free to write to us at any time. We'll be back soon. Take care. Speak to you soon.